and welcome to the next video in the Arielfx Beginners Course series. And in this video we're going to be talking about the concepts of support and resistance and supply and demand, as well as plotting key levels of support and resistance or supply and demand on your charts. Okay, and these concepts, at least the concept of supply and demand, you are more than likely familiar with. But we're going to take that and apply it to the forex market. Okay, so within the foreign exchange market, we have what you will hear as support and resistance. Okay, support and resistance, all right, are essentially levels at which price is predisposed to come to, all right, and find some sort of demand or supply, all right, and have a reaction or a rejection off of. So oftentimes you will see price come down to a level, all right, where buyers might come into the market and push it higher. We might come back down to the level, and because people see that there were buyers at this level in the past, people buy again. All right, and so there's demand for the instrument at this particular level. Okay, the same thing goes for resistance. Oftentimes price will come to resistance, will come to a level where sellers find it attractive enough at a good enough price to sell. All right, therefore we have created a resistance where price doesn't push past this level. It's being resisted. Okay, and so another way to think about it is floor, support, okay, where price hits a floor and finds demand, finds buyers, right? Because people see in the past people bought at this level, therefore they look to buy at this level again, as well as a ceiling, which we also call resistance. Okay, and throughout your studies you will see that there are certain levels that historically act as support and resistance for a currency pair. Levels at which price has come to frequently and found resistance, and levels where price has come to frequently and found support. Right? It's essentially a way to think about it is a level at which price reaches and there is either demand or supply for the asset. Okay? And so you will see this in your analysis. When you look at a chart, you will see these levels, all right? And what you'll notice is they aren't very specific prices, right? They're what we call zones, okay? They're what we call zones, support and resistance zones, all right? It's not one specific price. Oftentimes, price might make it down to this line one time. The next time, price might come a little bit lower, but then more buyers come into the market and push price back up. All right, so it's a generalized area, okay, where you can find support, demand, supply, resistance. Okay. Now, what I want to point out to you all is that we do not trade support and resistance. We do not trade simply off of support or off of resistance, right? We will not buy a currency pair simply because it's reached a support level where people have bought it in the past, where price has rejected and pushed back up in the past. Okay? We do not do that. But we do want you to have an understanding of these concepts, all right, of support and resistance, because it's something that you will notice, it's something that you will hear about, okay? And like I said, we do not trade specifically off of support and resistance. We use support and resistance, or supply and demand, as a confluence, all right, as a confluence with other supporting evidence, more important supporting evidence in my opinion, to enter our trades. Okay, but I really want you to just understand the concepts and the principles of support and resistance. Okay, now what I do want to point out or talk about is higher time frame support and resistance, higher time frame key levels of support and resistance. Okay, and that is, I'm talking about the monthly and weekly time frame. Okay, so we're going to drop down into, this is the Australian dollar paired with the US dollar. Okay, and what I want you to see on the weekly time frame, where each candle represents a week's worth of price action and price movement. Okay, we want to be able to identify very strong levels of support and resistance from the past. Where has price come into from the past and found support, and where has it found resistance? Okay, so you can see here quite clearly this level within here, price has come down into it, it's rejected it. Price has come down into it, it's spiked through it, it closed back above it. It's come down to it again, it's rejected it and pushed back up. We have broken this level, we have broken the floor, and we have come back up, and now the floor has become ceiling. So this is an indication of a very strong level within this market. Okay, floor, 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 break through the floor, retest it as the ceiling. Okay, and it's a simple concept that if you really want to learn more about it, it can easily be studied on something like babypips.com. But this kind of video, I just want you to have a general understanding, and I'm going to get to my overall point for this in just a moment. Okay, but like I said, price will often create some type of floor, all right, and ceiling, where if we then subsequently break through the floor, price will then look to come back, and now this has turned into the ceiling, right, where we have broken out of the floor and now are retesting this area. We're coming back to it because price has been magnetized to it in the past. We're coming back now to treat this as the ceiling, where we could then move lower. Okay, and this is a perfect example here on this AUD USD chart, where price has come into it multiple times, broken through it, and now tested it as the ceiling and continue lower. We yet again come up to it, test it as the ceiling, move back down. Just this week, we've come back into it. All right, and this was a level in October of 2018, right? October of 2018, December of 2018, March, retested it as ceiling in July of 19, retested it as ceiling in December of 19, retesting now as a ceiling, right, in June 2020. Okay, but I want to get to my overall point now, and that is these levels are oftentimes at what we call psychological numbers. Psychological round numbers. Oops. Wow, I'm butchering this. Clearly my spelling is not on par. Psychological round numbers, okay? And with psychological round numbers, I mean numbers in price that end in specifically 0, 0, and 50. You will also see quarter levels like 25 and 75 as key levels. But what we're doing here on the weekly time frame is identifying the area, right, a general zone where we've seen support and resistance, and we're looking over to our price bar to see what round number we are around. And in this case, we can identify 7050, 70500. Okay, and that is a round number. Now, why is that important? Why is that critical? Well, that is because the banks, right, who control this market, the liquidity providers, the hedge funds, they play this market off of round numbers. They typically enter bulk orders, big positions, at round numbers. It's easier for them. Okay? So oftentimes, like we see here, prices come into the zone around 70500. Bulk orders enter the market and we sell off. Same deal here. We sell off. Okay? So that is where their orders sit. The big boys, the big banks, the ones with lots of money, that is where their orders sit. Okay? And as you will understand in later videos, especially within the advanced course, the concepts that we trade are based off of clues that the banks provide to us. Right? The banks provide clues to us that we can capitalize off of. So we want to understand how the banks play the market. We want to understand where the banks enter their trades. Right? Where the big moves are going to occur from. So we can take those clues and capitalize off of them ourselves. Okay? And so we can go even further. Down here, we can see multiple rejections where we have multiple wicks where prices come into it, retreated, into it, retreated, into it, retreated. So we can classify this as a level of support. All right, support, support, support. Price broke through it. We retested it as a ceiling, and we continued down. Okay. Now, what round number are we near? Well, we look on our price bar, and that's quite clearly around 6,700. 6,700. Okay, so we can take our line. All right, make this 6,700. This is another area where we've seen higher time frame. Remember, this is the weekly time frame we like to look for these things on. Where we see higher time frame support and resistance, indicative of bulk orders entering or exiting the market. Okay, so like I said, in later videos you will understand why this is important to us, but for now we want you to have a basic understanding of what is support and resistance and why do we need to understand key psychological round numbers, right? It's because the banks enter their orders off of these round numbers. Okay, they oftentimes act as support and resistance, these round numbers. Okay, they're psychological. If you think about human nature, if you're a bank, do you want to place your position at 0.70159? You want to place your order at 0.71322? Or would you rather place it at something like 0.7050 or something like 0.6700? Okay, It's a natural phenomenon where if price comes down into a level like 600-700, one might think, okay, maybe this is a good price for me to enter or exit the market. And so therefore we often see reactions and big moves off of these types of levels. Okay? So just a general overview and understanding of support and resistance, supply and demand within the market, and how we can use it on a higher time frame to understand the psychological round numbers that have acted as a barrier or support or resistance, a floor or a ceiling for price significantly in the past. Okay, and you can go through different currency pairs on these time frames, the weekly, the monthly, and identify these levels, especially ones that are closer to price, right? We don't need to go all the way up here and find these levels because price is so far away from that right now. So we want relevant, significant levels. And you can go through whatever pair that you're trading and find these types of levels, okay? Where price is made a floor and price is making ceilings. Where we're finding demand, where we're finding supply. Okay? So I hope you've gotten a good understanding, a good background, a good knowledge of support and resistance and psychological round numbers within key levels in the foreign exchange market. I hope you can apply that to whatever currency pair that you prefer to trade. Okay?